Welcome to the Kapital News. I'm your host, Alex Koritis. Today is January 29th, 2021. Thank you so much for joining me. It's Friday. We're going to do a weekly wrap-up. A lot to discuss this week, a lot to discuss here today because so much was taking place in the markets this week, especially with respect to this little guy versus big guy narrative that's being pushed throughout the mainstream media, as well as the financial mainstream media. It was something to pay attention to because I do not think it is safe. I do not think it is the right thing. I am gravely concerned about this. I think it is a pump and dump scheme. I think there is something else afoot behind the scenes that is about to be revealed in the not too distant future. I think more little guys are going to end up getting hurt as a result of this. Believe me, I am doing this podcast here every day talking about the fraud, the manipulation, the corruption within this system. If there was somebody who would support this type of action, it would be me. But I don't support it because I see a lot of the downstream effects, and they scare me, they frighten me, just because of the damage that it's going to do to so many people who are not going to see any of this coming whatsoever. A lot of people are getting caught up in the emotional storm because that's where we find ourselves in this country. Everything is political. Everything is emotional. And what I am attempting to do and have been doing, and I hope I'm doing a good job of it, is explaining the basic fundamentals of how the markets work and how they are supposed to work. This is all about definitions. This is all about understanding the mechanics of the system. That's it. Not weaponizing the markets in attempt to destroy a hedge fund or an institutional investor, or vice versa, with somebody else trying to destroy the little guy. If we begin to weaponize the markets, if we begin to let this be a game or a tool to seek revenge, personal vendettas, anything like that, we're destroyed. Markets are here to serve the broader markets. Markets are here to establish a scenario where it can be a win-win. Not F you, so F you too. That's where we are finding ourselves with this. And because there is such pandemonium out there, because there is such division out there, this is just another thing that falls into the box of goodies that the powers that be are using against us, the people, to distract us. Divide and conquer. Which side of this do you come down on? Red versus blue, Republican versus Democrat, conservative versus liberal. Black lives matter, all lives matter. Divide and conquer. And look how quickly Congress acted on this. Congress doesn't act this fast for much of anything unless there is something at play behind the scenes. And when you have people like Ted Cruz getting in bed with Nancy Pelosi and AOC and Maxine Waters and Elizabeth Warren, something ain't cooking. You understand me? Something is brewing, and it's not going to be good for the majority of us. They're going to clamp down because this is what they do. This is what they're known for doing. They clamp down. They don't liberate. They don't break the chains of government. They put more chains of government on us. Do you really believe that a bunch of people, a bunch of new traders and investors, whatever you want to call them, on an internet message board, who have virtually no experience whatsoever, were just randomly able to get together and band together to bring down a hedge fund? Or attempt to, at least temporarily? Do you honestly believe that's just it? This is just a spontaneous uprising? Give me a break. You weren't born last night. There's something bigger at play here. Most of these people, unfortunately, think that stocks only go up because this has been the environment in which they've become accustomed to. So they don't understand what a financial statement looks like. They don't understand how to conduct fundamental analysis. As far as they're concerned, what's the point? Stocks only go up. So how are they going to understand what short interest is? And how are they going to understand how to, quote unquote, fight or defeat a hedge fund? And furthermore, I don't think they fully understand, as I have been noting here over the past couple of podcasts, what a hedge fund actually is. the money that they manage. Whose money that they are managing? Because it's other little guys' money. So if it's the little guys versus the big guys, do you understand that the big guys managing money for the little guys? So who are you really after? Now, is there a positive out of this? Perhaps. The only positive that I see out of this, at least in isolation, at least in a static environment, is the fact that maybe some of these people and some of the broader population in this country is starting to wake up to some of the shenanigans that are taking place in the market. But what concerns me is the fact that this seems to be the route that we're going down as some sort of solution, and it is not the solution. It's the furthest thing from the solution. So I hope I made myself clear over the past couple of days. Something I want to reiterate from the standpoint of short sellers is that short sellers offer a value to the market. If the short seller is going to make a bet, he has to be really sure of him or herself when they make this bet, because if you go long a stock and you put $1,000 towards buying a stock, all you can lose is $1,000. You put your $1,000 cash in there, boom, that's all you can lose. Short sellers, on the other hand, they're borrowing it to sell short from a brokerage. They're on margin. They can lose 100%, obviously, and then some, because they owe money on top of it. They can put themselves out of business doing this if things go the wrong way. They're not in the business of losing money. So in order to put a position on to sell short, you bet you're behind they're going to do a lot of research, either in-house or they're going to pay a forensic accounting firm to do research for them. And if they should uncover fraud, that is value that they are giving to the marketplace. Because how is it valuable for that company to continue to commit fraud, accounting fraud, some financial shenanigans, and to attract outside investment? They're running a fraud. How is that valuable? So for all of those people out there who want to criticize short sellers and say it should be banned, it should be illegal, that's ridiculous. Because now who's going to keep in check companies that are committing fraud? How is that of value to the overall marketplace? The answer is it's not. This is not difficult stuff. But people do not understand these basic definitions. They do not understand the mechanics of markets. And they are emotional, and they are frustrated, and they are pissed off, and I understand it. But this is not the solution. This is only going to make things worse. An eye for an eye here is not the solution in this manner. Most likely going to cause bigger problems, and most likely Congress is going to get involved, which means the problem is going to get exponentially worse. So congratulations. Some market performance, and because we skipped our typical discussion yesterday with respect to initial jobless claims and the Fed's balance sheet, et cetera, we will have that discussion here as well. But first to market performance, it was another sell-off day across Wall Street. We have the dollar index gaining a little bit, 90.55 on the dollar index. Depending on the currencies, there's some mix match going on here between the major currency pairs, but nothing too spectacular anywhere to see. The Dow Jones Industrial Average gave back 2.2%. The S&P 500 also down 2.2%. The NASDAQ 100 gave back 2 1/3%. Japan did end up closing down about 1.9%, a sea of red across the pond in Europe, anywhere from 1.5% to 2.25%, depending on the index. And the Australian markets also closed down in the red, down 0.6%. On the share price front, some of the big boys, we have Apple giving back 3.7%, Tesla losing 5%, trading at $793 per share. Microsoft also giving back 2.9%, Amazon down 1%, and Facebook, to round it out, giving back 2.5%, and a sea of red across the board there as well. Is this just your typical run-of-the-mill correction? Stock markets are known to have corrections. There's nothing wrong with that. Typical standard correction is about 10%. Is that what's going on here, and we will continue to vault higher and make new all-time highs? Or is this the start of something new? Time will tell, but this has been the worst week on the Dow Jones Industrial Average since October. On the commodity price front, we have WTI trading down at $52.15 a barrel. Brent, on the other hand, did gain a little bit, $55.89 per barrel today. And natural gas gave back 4%, trading at $2.55. Gold and silver both had another decent day. Gold rather mediocre, but gold is at $1,847 an ounce. Silver continued to climb another 2 1/3%, $26.99. Not quite at the 27 handle, so I'm going to wait till we actually cross it. And Uncle Sam's 10-year junk note yielding 1.07% up for the day. So there's some market performance. Let's get to initial jobless claims. So, unfortunately, for the week ending January 23rd, seasonally adjusted claims came in at 847,000. This was a decrease from the prior week, but the prior week's figure of 900,000 was revised upward by 14,000 and now stands at 914,000 for the week ending January 16th. So, still heartbreaking and devastating figures. 847,000 was the official number from the Department of Labor, again for the week ending January 23rd. For continuing jobless claims for the week ending January 16th, lagging 1 week, we have 4.7 million. This is a decrease of 203,000 from the prior week. This has been a continuation of this downward trend, but unfortunately, a lot of those who fall off of your regular state unemployment are finding extended benefits either through extended state benefit programs or federal programs, whether that be the PUA or PEUC, whichever they qualify for. But with respect to the PUA, for the week ending January 23rd, that number comes in at 427,000, a week-over-week decline of some 20,000. So at least that's maybe somewhat promising, a little by little. For everybody in aggregate, regular state, federal employees, newly discharged veterans, PUA, PEUC, extended benefits, state additional benefits, and a work share program, we get a grand total of about 18.3 million. This is a week-over-week increase of 2.3 million. And this is for the week ending January 9th. Recall this number in aggregate lags by a couple of weeks. And during last week's podcast, we talked about this massive drop-off from some 18 million down to 15.9 million. And we said, well, what's going on here? Well, we said, well, Nobody Cares Act 1.0 was expiring with respect to some of these additional benefits. And so there was a little bit of a lapse between when Nobody Cares Act 1.0 ended and Nobody Cares Act 2.0 got started. So there was a little lag there. And clearly that proved to be the case because we're right back to where we were a couple of weeks ago. 18.3 million. The biggest gains, as you can understand, are in PUA, gaining 1.6 million week over week, PEUC gaining 837,000 week over week, and extended benefits gaining 96,000 week over week. So when we take the 18.3 million figure and divide it over the grand total of 142 some million as our denominator, we're at about 13%. So that's somewhat more realistic for the true picture of unemployment as opposed to the, 6.7, 6.9 official unemployment figure that comes from the Bureau of Labor Statistics. And of course, we know the numbers are unfortunately even worse than that because of the people who have been long-term unemployed who may not qualify for any of these benefits or are just having difficulty qualifying for them. And of course, you still have a lot of people who have yet to receive any of these benefits. It's bad out there, ladies and gentlemen, and it still bothers me to no end and disgusts me that we have trillions of dollars being printed out of nowhere and making most of its way into financial assets, pricing people out of homes, juicing the stock market to record valuations. That's just going to end up hurting more people than helping. And meanwhile, we have tens of millions facing evictions, tens of millions in food bank lines, et cetera, et cetera. We talk about it all the time. And yet we still have a stock market that's hitting all-time highs where the top 10% of the population owns 90% of the financial assets. This is a storm in the making. This is a disaster in the making. And day by day, piece by piece, narrative by narrative, story by story, we're seeing further cracks in our foundation. And they are trying their damnedest to keep this thing afloat. That's all they're doing. You even hear it on the financial media. I mean, those are the headlines. They're propping the economy up. Propping it up. Is that what you want? Is that the type of economy you want? One that is propped up? Or do you want one that can be built off of a sound and solid foundation that can take us generations into the future? because we can do it. We have the blueprint. It's called the Constitution. It's called free market capitalism. Even that's a difficult definition for many people to grasp, which is why one of the reasons my co-author and I, several years ago with our book, The Cynic's Guide to Investing, took the time at the very beginning of the book to make sure that all of our readers understood what all of these terms meant. We all have to be on the same page when it comes to definitions. This should not be something difficult to comprehend, to understand. Free market capitalism. Saying that can trigger people, and you can't even have a conversation with them. And clearly they don't understand what free market capitalism is. Those people who go off the rails as soon as they hear those words. I mean, how is any of that bad? What's wrong with being free? Isn't that a good thing? The lack of force. The lack of being compelled to act or behave in a certain way. The ability to do what one wants freely, openly, as long as they're not doing any harm to somebody else. What's so wrong about that? A market. Individuals and companies coming together to transact freely for their services, for their goods, to benefit each other. Why would you trade with somebody if it wasn't to your mutual benefit? I'll give you $100, you give me groceries. You want the money, I need the food. Everybody wins. What's wrong with that? Absolutely nothing. Capitalism. What's that? That's the use of capital. Well, what's capital? Well, capital comes into existence when you go to work and you produce something for the broader economy. You earn a wage. That's capital. You get to use your capital freely in exchange with other people and businesses. My God, what is so difficult about this? What is so evil about any of that? Absolutely nothing. Yet people go in a tizzy. They go in a panic. They think it's the most ruthless, immoral system that's ever been devised. Complete opposite. It's the most moral and righteous that has ever been devised, because it allows you to do what you want freely. The problem is we have too many mini dictators in the Republican Party and in the Democratic Party, or just in government in general, that wants to tell you what to do because they think they know what's best for you. And that's what gives me concern about our little story time here with GameStop. These little dictators are going to come out and say, oh, you don't know how to take care of yourself. You don't know how to invest. You're going to get picked on, so we have to come in and we have to do everything for you. Don't be surprised if that's what happens or something close to it, the path that it puts us on. Don't forget, this is a weekly wrap-up. We talked about the IMF and the World Economic Report, their outlook. We talked about the Great Reset, which they've been talking about for quite a while. And the founder of the World Economic Forum, Klaus Schwab, I believe has been caught saying openly recently, that in this Great Reset, you will own nothing and you will like it. Let me repeat that. You will own nothing and you will like it. Does that sound like a great reset to you? I don't think so. What are these people smoking? What are they on? What are they doing? What are they attempting to do? You better pay attention. So when it comes to the solution, I know I'm going to sound like a broken record when it comes to this. I'll deviate slightly first and then we'll get there. You know where I'm going with this. But you have, if you want to defeat hedge funds, if they really upset you that much, the way you defeat them is by being better market analysts than they are. The early bird gets the worm. You have to get to those stocks or those commodities or those currency pairs or whatever you're going to invest in. You have to get there before the hedge funds do. And you can do it. You just have to put the time and the effort in, just like they do. I mean, that's what a market is. There are other people. I mean, think of it, right? The hedge fund manager is in business to make money, to manage money for a group of people. High net worth individuals, pension funds, university endowments, not-for-profit, nonprofits, etc., etc. A lot of little people in there, isn't it? It's their business. That's what they're good at. Just like the small businessman might be a good carpenter, and he has a carpentry business. Well, the way that he goes about beating his competition is not by going down the block to their office or to their woodworking shop and set it on fire. He outdoes them with his craftsmanship, with his pricing model, with his customer service, with his business acumen, with his advertising and marketing strategies. That's how that carpenter would outdo and outcompete his competition. You don't like hedge funds? Fine. Outdo them. Market manipulation, collusion, not the way to go about it. What people are upset about is the fact, and it's really more the big banks than it is hedge funds. Big banks get bailed out when they make a mistake. When they lose money, they get bailed out. Because there is a distinction between banks, big banks, and these hedge funds. Bankers don't go to prison. They get deferred prosecution agreements. I see hedge fund managers, if they commit fraud, go to jail all the time. But the big banks is where the focus needs to be. The Federal Reserve is where the focus needs to be. Because that's where the bailouts are coming from. Congress is where the focus needs to be. Because they're the ones authorizing these shenanigans and picking winners and losers. That's where the outrage needs to be. That's where the energy needs to be focused. Not on trying to break up one hedge fund. I mean, my God, if you're really paying attention to all of this stuff, do you understand that hedge funds, not only can they short stocks, like you can too, but they can buy them? What a thought! Who knew it? Hedge funds can go long. And in all of this mania, there are hedge funds that own some of these other stocks that are going ballistic. So they're making out like bandits. I thought this was little guys versus the big guys, meaning we're trying to beat the big guys. Well, some of these guys are making more money than they've ever made. I don't understand this other than the fact that the thing that makes the most sense to me is that this is a fix, pump and dump, something afoot to get some type of legislation passed. Period. End of story. We're going to find out soon enough. What else do we have today? The Federal Reserve's balance sheet update, slightly down from the week prior. Let's see here. Last week, of course, was an all-time high, $7.4 billion, slightly above that, and we are still there, but about $10 billion below where we were last week. Again, not any one particular number is what we're focusing on. It's just the general trend, and I like to go over this week by week so everybody knows where we are. With respect to M1 money stock, last week was an all-time high at $6.8 trillion with a T. Slightly below that this week, $6.74 trillion, so giving back about $59-60 billion. Barely registers on the graph as a down blip because this thing is just out of control, straight up vertical. Then with respect to M2 money stock, last week was an all-time high at $19,550 billion. This week we made another all-time new high slightly at $19,560 billion, so an increase of $10 billion with respect to M2 money stock. Then, since we are talking about GameStop today as well, increased 131 points, a gain of 67, well, let's call it 68 percentage points for the day, trading at $325 per share, which gives us a market cap of $22.7 billion. So yesterday, I think we were around 13 billion. The day before that, we were about 24 billion in change. So 24 down to 13, up to 22.7. Completely normal markets. This is exactly what's supposed to happen. Yeah. A company that may have very well been on the verge of bankruptcy is definitely not worth $22.6 billion. So a lot of people are going to get hurt in this. And my goodness, does this not really set the stage for another hedge fund or other investors to come in and really short the hell out of this thing? Because let me let you in on a little bit of math. The difference between $325 down to zero, I'll say $1 because you can't buy at zero, $325 down to $1 per share is a lot bigger, a lot more potential for profit than from $20 a share down to $1. So do you really think the little guys really stuck it to the big guys here? All I'm doing, folks, is talking about math, definitions, how markets function, and that's it. This should not be difficult to understand. But when it's on social media, in CNN, in Fox Business, in Bloomberg, and CNBC, everybody gets in a tizzy and there's emotions and logic is thrown out the window. This is not difficult stuff to comprehend and to understand. But this is the world we live in. This is what happens when you are in these manias. This is what happens when you are in these bubbles. And I don't know the timing of it, but this just seems to me like this is just more ridiculousness, more frenzy, more mania. And this is something that you do not witness at a market bottom, but rather a market top or getting closer to a market top. But your guess is as good as mine. Enjoy your weekend. If you have questions, if I am not making myself clear enough on my argument, or you just flat out disagree, that's perfectly fine. But send me a message, send me an email, make a comment. I will gladly address it. That's what I do these podcasts for. If you completely understand or are in complete agreement, fantastic, I love it. And if you don't, I love that too. I'm not afraid of debate. I'll go up against anybody. Enjoy your weekend. Stay diversified, stay vigilant, and stay with the Kapital News. I am Alex Koritis. Godspeed.